Hi everyone, Krugs here from Ace Trading. Today I'm excited to share with you our new bot being released, the Cutback. The Cutback is based upon price action similar to the surfer, but we're not taking that initial push through the wave. So you can see down the bottom here, this is a perfect example of where the surfer would take a trade and be successful. So it broke through the wave, and then it comes down to the take profit, and it's taken your win. We're looking currently at a take profit there of 7 ticks, or it took a 7-tick win. What the Cutback bot is doing is it's not taking that trade. It's waiting for an initial break of the wave and then a pullback. Okay, and we call that the cutback in surfing terms. When you're surfing a wave, you'll often go to surf the initial push of the wave and then pull a cutback to pick up momentum before coming through and taking out the wave and continuing your ride with surfing. So it is the same with trading. Okay, I'm going to explain today a few different examples and point out a few parameters that you need to keep in mind, and to give you some examples of trading the US daytime. Okay, I like using the cutback in the daytime because it tends to not get the same slippage as you would the surfer, because we're not taking that initial push. Okay, often with that initial push to the wave, that's when you tend to get a greater amount of slippage. When there is a pullback and then a revisit to that area, it's already taken that, that burst of orders, and it tends to move a lot smoother through that area. Okay, but I'll talk through what's happening on the screen. But before we do that, I will pull up the strategy. So I've already imported the strategy to my NinjaTrader. So under strategies, I have Ace Cutback, and I already have it added to my chart. So I'll add it to my chart. These settings today are not always my settings. So my settings change day to day based on price action. So I would often look at the chart and decide how many ticks I want to go for my take profit. Very similar. I have very similar values, but they do change from time to time. Today I'm running a 5 swell. So I've got my 5 swell on. I am running one contract. Because it's in the US daytime, I know that it's going to be quite volatile, so I don't want to put myself up to too much risk. I'm looking for a 7-tick take profit, a 20-tick stop loss. You can lower your stop loss, but you just got to be mindful that you will get stopped out more often than you would like because of the NQ for one, and because it's a US daytime, you're going to still get that volatility and price bouncing up and down a fair bit before heading in the direction you want it to. So I like to have a bit of breathing room, so keeping up at 20, especially if I'm only using one contract. If I was using 3 or 4 contracts, I would look at having a tighter stop loss, just so that I'm not leaving myself out there getting some big losses. This is then one of the new parameters. It's called the cutback amount in ticks. So this is the amount I want my pullback to occur. So if this had broken through and only gone through a couple of ticks, what the amount in ticks is looking for is how many ticks do I want it to have a cutback or a pullback before putting the trade in. Okay, often you can keep it the same as your take profit. I often like to have it a bit one or 2 ticks more than my take profit, but if my take profit is like 3 ticks, and I could still keep that at 8. And what it's looking for is, obviously, if it's pushed through 1 tick, I'm waiting for it to come back another 8 ticks before getting to that trade, and you'll see it in slow motion when I put some trades on. There's also a couple of other options here. One is price allowed to pass your original TP? Okay, so what that means is there's 2 options for this cutback bot. This had passed my original TP of down here of 7 ticks. If I ticked that box, it would still allow me to have a pullback of 8 ticks and then place my trade. If I'd leave that tick box unticked, it's saying that as soon as price passes my original TP, I don't want to be in this trade anymore. Okay, and they are both useful in different times. Often in this volatile time of US daytime, I won't allow it to pass that TP, but if it's the US nighttime and I know that I'm trying to get a number of trades, for example, if I look over here and I was to take this breakthrough, if I missed that breakthrough because there was no pullback, when price came back past this, it could then trade that position again. Okay, it does give you that option for multiple entries for that, because it's a key point that we want to trade. Okay, so it's going to take a bit of back testing, a bit of playing around, and I would recommend you do that on a sim account before running it on an eval or a PA account. I've got my start and stop times, which you're able to set. And today I'm just going to run, I'm looking for a 300 profit target and a 500 loss. And you're going to notice a couple of things when I run this today. But like all my bots, I don't like to run them for a great amount of time. I like to get into the market, have it run for a couple of hours, take my profit, whatever it may be, and turn it off. Okay, because each trade has its own individual percentage of win rate. But the longer you leave it in there, the more if you're trying to look for consecutive wins, the probability is going to play against you. Okay, if you're going in for 1 or 2 trades, there is a high probability you are going to get your wins. But the longer you leave the bot running, the more chance that there is a loss coming around the corner. And I want to make sure that I pocket all my wins. So I tend to run it for a couple of hours, and that's the whole idea of having a catalog of bots so that you can run each of them for a couple of hours and take your wins. Okay. Everything else is the same. I'm running it on the 500 tick chart and everything was pretty good, so I'm going to press OK. My recommendation is to never run a bot in the first hour. It's quite dangerous. It's very volatile, and even if there is a perfect setup, because of that first hour and there's a lot of volume happening, often price can punch either direction super quick and not necessarily play in your favor, because it's not really going against volume profiles and price action. Okay, so I'm going to run the first test here just after the start of the US Open. So we have 8:30 here. You can see that 8:30 is the start. All right, I'm going to run the first trial at the start of the US Open, which is 8:30. This is where we're going to catch that high volatility, and it's not necessarily a time that I would start the bot, but I just want to show you the difference between starting it here and starting a bit later. I'll start it off pretty slow, so you hopefully will catch a few trades. And you can see that the price has broken through the wave, so it didn't take any trades. And I'll try to stay with it and catch a couple of these trades. Oh, here we go. So we had a pullback and then initial, and then we have a pullback. Okay, so this is what I was talking about. So it broke the initial wave, it broke into it, and then immediately pulled back. Look at that. It's a massive red candle, and that would have stopped you out on the surfer bot. And that is one of the reasons why I don't run the surfer at US Open. It then entered the trade, but then because it's a high volatile time, it then had a pullback, which is nothing new. It's going to head in that direction, except that I don't have a large enough stop loss to stay in the trade, so it stopped me out, and then straight away I'm down $100, just because of that volatility, not because of the direction. Look, it's still going to head that direction, and I was confident, the bot is confident it's going to head in that direction, except that I was stopped out because I didn't put the stop loss where it needs to be. Okay, if I was going to run this in the US Open, I would need to make sure my stop loss is somewhere down near the other end of the wave, so that it gives it room to breathe. Okay, but I don't have that option to do that, so I take the loss on the chin. Now we'll just wait for a new wave is formed, and then we do, and then price is now moving along. I'll move over so we can catch hopefully another trade. So I might even speed it up to show you. So it didn't take that trade because there was no pullback. It would have been a great trade for the surfer, would have taken nicely. But saying that, it could have had high volatility, so you could get an error with slippage. There's always that concern around this time as well. Straight through for another surfer win. Okay, looking good. We have a trade, and then we had an initial entry and then a pullback again. So again, we have the initial push in to the wave. We had a pullback, so it pulled back more than 8 ticks, and then it enters the trade. But because we're still in that first hour after the open, we still got the volatility. I'm still quite confident that it would move down, and if it didn't, you take that loss on the chin. And you can see it would have been a win if I had a larger stop loss. Okay, so you can see we're still in that market in that first hour. I'm just going to speed it up a bit so we can catch a number of trades. When I'm backtesting, I tend not to run it too quick, just so I can watch the trades. But I will speed it up just for the sake of this video. You can see some great trades for the surfer. Some really great trades for the surfer. But we're not looking at those trades because we're after a cutback, which is, they all have different percentages, but that cutback is going to save us getting trapped in trades. Okay, and look, we had another stop out. Okay, and look, we had a stop out there, it pulled back, and then that was from this initial wave. So this initial wave had the pullback, okay, pull back to there, and then we have the new wave formed, which now has entered. So we've got two trades here entered, and then there's a pullback. So you can see how many times this pullback or the cutback occurs, and then we moved away, and we still have another loss. Okay, we still haven't broken our loss limit, but we're not even out of. We've just pretty much cracked the first hour of the day, and that is a reason why I don't like to trade the first hour of the day, because of these pullbacks. Look, it even went through. You would have taken wins if you had a large enough stop loss. Okay, so the direction is correct, but yeah, it's just that first hour. I don't like to trade it. If I trade, I usually start my bots from the hour after, or even 90 minutes after the open, just to get rid of that noise. And then you have a better picture. Okay, and look, see, look, we haven't got those initial pullbacks where we've got a win there. Okay, we'll keep going. You're going to find this is going to be a more truer picture of price action once you remove some of that volume and I guess the whales really controlling the market. And look, see, it moves through nicely. Had that initial pullback, waited for the entrance, came down, took it nicely. Okay, as I said, the cutback isn't going to give you 100%. Nobody's 100%, but if you can use the bot in the appropriate times, you're going to raise your percentage, your hit rate. Okay, and that's the whole idea, and that's one of the main reasons why I trade the US nighttime, is because it has low volume, but you tend to find there's a lot more direction with the market, and I'm able to take those wins. There's another win. See, straight after that, after open, I'm trying to get back the money now. That's what I'm trying to do. This, instead of having profit, I'm trying to get back the money. So I could run this all day, and I'll speed it up. You're obviously still going to get your wins and your losses, and there we go, another win. So we're slowly making the money back, only taking those cutbacks, and there we go, another win. No need for a cutback on that one because it went straight through. That one went straight through. Okay. So I've made back a fair bit of money already, which is great. But if I hadn't have traded that open, I would have made money. So it's just by changing that mindset and changing the time you're trading the bots is going to trade how much money you make in the day. Okay, so again, I like to use a profit target, and I'm still trading until I hit my profit target. I'm trading longer than I would like. I've been trading now for close to 4 hours. If you look at the time, and I still haven't hit my profit target. I'm still in the red. Okay, but imagine if I wasn't trading that initial open. I was down $400, and I've made back nearly close to $300. I've nearly made back my profit target. There we go. So I've made back $310. I've hit my profit target. So I've hit my profit target. So there's another one. I've definitely hit my profit target now. So you can see if I didn't take those initial trades on the day, I would have hit my profit target from 9:30 to, would have taken not even yet 12:30. So it would have taken me 3 hours, could have taken my $300 and turned off the bot. Okay. If I leave the bot running, I know there's a loss coming up. It's inevitable to have these losses, but it's important that you do take your profit for the day and then walk away. Same with losses. If I was to hit my $500 loss, that'd be it for this bot for the day. I'm quite comfortable taking that loss, and I'll start the bot again tomorrow. What I would need to do is I need to revisit the parameters. Maybe I'll need to revisit, is 20 a stop loss I would like to work with. Maybe the countback. Maybe countback should be larger or smaller. Okay, maybe I need to be trading the price allowed to take profit. Okay, but I will keep going until see how far I get. See what I do get, whether I can hit my profit target. It's not ideally at a length of time I would like to trade for, because again, I'm either sitting and watching these in the market, or I'm letting the bot do their thing. Hoping to at least get back to green for the day. No, there we go. See, I told you there's always a loss around the corner, which is fine. If I'd only had the one loss, I'd still be in the green. Okay, and I'll go back. So I've made back nearly that loss. Okay, I'm down $90. Some slippage. Still down 20. It's nearly getting closer to the end of the day. You can see that price, it does break through. So I'm just going to pause there for 1 second. This is a trade the surfer would have taken. And because it pulled back and initially went the other way, it would have been a loss for the surfer. But because it didn't revisit the price action of that wave, the cutback didn't need to enter the trade. So that is one way. The cutback is saving you some of these bigger losses. Okay. Yes, it's not taking as many trades as the surfer, but often they are a higher percentage hit rate. Look, if I took another loss, so there would have been 2 losses if I ran it for this long, but ideally I wouldn't have ran it this long. Okay, so now we're in the evening. Okay, so now we've gone to 7 o'clock. It's a nighttime trading, and look, I still haven't hit my profit target. It's not something I want to do, as I said again, but yeah, gives you an idea. Okay, now I'm going to show you the difference now if I was to allow price to break the wave and pull back. So what I'm talking about is, I go to the strategy, the parameters. Now I'm going to allow price to pass that original TP. This is often not as high percentage hit rate than unticking it, but it does allow you to have more trades. So that means that you are in the market for a less amount of time. So let's have a look at what I mean by this by watching a couple of these trades. I'll see if I can capture some of them in play. So I also wanted to mention that now I'm starting the bot from 9:30. So I'm missing out those initial losses. This is where I would normally start a bot anyway if I wanted to run the US daytime, just after that high volatile time. So let's see if we can catch one of these trades. Oh, there we go. So there was an initial pullback. It doesn't have to pass, but we have a pullback, and then we want to hopefully catch this trade, and we do, which is great. That wasn't an example. Oh, here we go. This is a perfect example. Here we go. So what happened here was price broke through that wave, pulled back all the way down to here. So now we've broken through it. It's allowed the price to go through the wave, come back, had a pullback. It's put a buy order in here, and then we've taken it on the second way through. Okay, so that's the difference between having that tick box on or off. I'm just going to slow it down. Hopefully, maybe we catch a couple more trades. We're sitting at $70 so far. The price is moving up. Here we go. So we have now our wave crest and our wave trough. Let's have a look here. Here we go. So this one price didn't break through, but you can see it broke into our wave and then had a pullback, and we will hopefully get that direction and perfectly taken that trade. We will keep working for another trade. See if I can capture another wave here, and okay. Oh, here we go. So here we go. So price broke into the wave. It went through the wave, but then there was a pullback. So then an order was placed here at the start of the wave, and now we're hoping on that re-entrance, it's going to take that wave. Okay, so this is ticking that box allows it to break through, but not completely go. If it completely goes, well, then obviously we don't want to take that trade, but this allows us to be in the trade a second go, and there we go. It ended up going through, but saying that, now prices come back and no new wave has formed yet. Okay, no new wave has formed yet, which is fine, but price has pulled back, and then we have a new wave. So we're sitting at 140, and we're only half an hour into our trading day. There we go. Price went in, it broke through. You see it broke through here. It had a pullback. It then entered the trade, and now we're going to try hopefully take profit. Okay, and which we do successfully. Okay, so if I don't trade that first hour, you can see how much more successful the trading day can be for yourself. Okay, I'm not saying don't trade that first hour. I'm just saying don't use this bot. Okay, and we have, there we go. So we had that initial push into the wave. There was a pullback. There was an order was set here, and now we're hopefully going to take profit with the movement of there we go, with the movement of the price action of the day. Okay. Trying to catch another wave here. Oh, here we go. So a new wave. Ideally, we want to get our 300 and then get out of the market. There's a bit of an accumulation here, so I can imagine a breakthrough. There we go. It broke through. Okay, so here we go. So you saw it then. Price broke through the wave, okay, which would have taken on the surfer, and then it pulled back, and it pulled back enough 8 ticks, enough to then set another order, and now we're hoping that price will continue down. So the main difference between that ticking that box and not is this trade wouldn't have occurred if I hadn't have ticked that box, okay? Because price broke through, it would have not traded if I hadn't ticked that box, okay? So then we'll get our win hopefully. Oh, there's a pullback. Oh, there we go. So we're sitting at, oh, there we go. It took, and then the next wave, and then we have our win hopefully. Perfect. 280. We're looking for one more win. And you can see the difference in not trading that first hour and getting into the market, taking your money and getting out. Okay, I could shut down for the day if I wanted to here, if I wasn't feeling too greedy. But I'm going to hopefully get one more. Perfect. And then now I could run this for as long as I want, and it wouldn't take any trades because I've passed my profit target. So that is me explaining the Cutback Bot. I'm super excited to release that today. If you have any questions, please put them in our Discord. And yeah, we're going to work on some parameters together. Definitely use this on a sim account. Remember the risk disclosures that we have. And yeah, I'm Krugs. Thanks for checking it out, and I'll catch you later.